What's going on, traders? Welcome back to the Build a Trader YouTube channel, aka the Bat channel. I'm Joshua, and in this video I'll be showing you guys a simple and highly effective strategy to trade the Nasdaq 100. This strategy is good for both small and large accounts. Just give me about 10 minutes of your time, and by the end of this video you will learn the strategy that I personally use. I really hope you guys find some value out of this video, and I'm gonna head to the charts. With that being said, let's cue the intro.
Don't stop running towards your dreams.
What's going on, everyone? Here we are on the charts. We are looking at the Nasdaq 100. I'm gonna go full screen right here, and you can see here I have just a 4-item list of 4 things you need to be good at or understand before you can use this strategy. So the first thing is market structure. You need to have a strong understanding of market structure on the higher time frames and lower time frames. And if you do not know market structure, you can watch my previous videos. I have a few videos on market structure as well as time frame correlation. Next, you need to be good at time frame correlation on how lower time frame structure and higher time frame structure correlate with each other, as well as the life of a candlestick. You know, you have to understand what time it is and how a particular candle opened and is reacting and is moving in conjunction with what is happening in the lower time frame. You know, for example, if the market is going to continue in the direction it is, or if there going to be a momentum shift, a change of direction. You have to understand what's happening using time frame correlation and knowing what time a particular asset or candle is moving in order to take advantage of certain trades and movements in the market. Third, you need to know support and resistance, because support and resistance lines up with market structure, as well as using time frame correlation. Support and resistance can also be known as key levels. Now, support and resistance or key levels is where we're going to be taking most of these trades from, majority of these trades, because that's where the higher probability trades come in. And lastly, you're looking for more particular candlestick patterns using support and resistance and key levels in conjunction with time frame correlation and using market structure. Okay, all these go hand in hand with each other. So let's dive in a little bit here. I'm going to start marking things up. So we have a level of support here, we have a level down here, and that's where we're going to start. Okay, the first 2 examples I'm going to show you are an example of a breakout trade, which I will be showing how to take advantage of this move, how one could have caught this. I will be showing how one could have caught these buys down here to catch this move. We're going to go over this breakout move first. So I'm going to go down to the 12-hour time frame and start explaining things a little bit here. So we can see that the market was in a range right down in here. Let me go a bit lower, the 4-hour. In a range, it was playing in between these 2 levels up until we broke that resistance and broke out, right? So what happened? How could you have taken advantage of this move? Let me show you. 1, understanding time frame correlation and market structure, right? So you can see how in a downtrend, the market makes lower lows and lower highs, right? You should already know the basics of this, but in a downtrend, that is what's going on. Okay? Then in an uptrend, higher highs and higher lows. A break of structure and a retest. Break of structure is when this happens here, when the previous low point is broken and it takes off, and then it breaks out and then comes back to retest. So we have this example here right, on a much larger scale because it's a higher time frame. Okay, so we see that this black line is this blue line in this example I just drew. Now this black line here represents structure. Once this structure point broke, it triggered a breakout because this is higher time frame structure. Once the structure broke, it took off. So let's go back to the 4 hour using this example I just drew with arrows, okay? So you can see that resistance broke, a higher low point was formed here. Now there's two ways you could have taken this trade. One, on the break of this resistance here. Once the candle broke, you could taken it, had a stop loss based off the lower time frames, or stop loss off of the previous candle on the lower time frame, or you could have identified what was going on here in these wick areas and taken advantage of that trade down here and got an entry down here. And some traders could have entered here as well as in the break of here as well. So let's go down to another lower time frame, the 2 hour. We're going to start with these wick exhaustions, this exhaustion area here, these wicks. These wicks is a candle pattern on a lower time frame. Okay, there's actually multiple candle patterns you need to be looking for, but the ones I'm going to be talking about are double bottoms and double tops. Okay, now a double bottom and double top needs to line up with a key level and with structure. Okay, now when these patterns line up with the key levels and structure, it has a higher probability of playing out than it does in seeing it in an area of it not being in a key level and it not being structured, right? Let's go down. This is a double bottom pattern. Let me show you. Now it's a little messy, but that's what it did. Whoop. Whoop. And then broke out, right? Hit that resistance and it triggered the breakout because it is a break of structure. And continued up. So let me show you something. Here on the line chart, right? Without the candlestick data, you can see that this is basically what happened. Oop, took off, made it even smaller double bottom here on like the 5-minute time frame. It dropped a little bit lower. See, boom. There's a double bottom that I drew with the arrows, and on the lower time frame, it made one here to further signal that it was going to break out, right? Now here's where time frame correlation comes in. Now in order to take advantage of this trade, there's certain times you need to take or be looking at the Nasdaq when it has more volume and higher probability of trades playing out than other times, right? Which would be London session and New York session. London session is at 12 a.m. my time in Seattle, and New York session is 5:36 a.m. my time. So see here, right here is 6:30 a.m. where this volume came in. It wicked off this level. You could have got entries down here using the exact knowledge I just told you. Understanding that, okay, we got those wick projections. Something's going on here. It's not breaking. You can use the lower time frame to take an entry. Around 5:36, you can see that it rejected here. You could have taken an entry right on the level or on the break above one of these candles. So for example, like this, taken on the level. Now this would be ideal. You might not exactly catch that wick just like that, but understanding when you should be trading this asset, then you have a higher probability of being able to catch moves like that. So then what happened? Boom, she took off. Caught that wick, caught the breakout point. She moved big time, like I think 600-700 pips total from that point. Oh, 800. Total of 800. Now you most likely wouldn't have caught that. No, I for sure wouldn't have caught that big of a move. Probably would have most likely closed where I have this risk reward tool is. And if you didn't catch it there, the previous situation I was talking about, where I was saying you can catch the breakout, put your stop loss below the candle. You could have caught it just like this. Same exact setup. tight stop loss. It's a breakout trade, right? If it's going to go, it's going to go. And in this situation, it did. See? The 1 hour took off. You would use the 15-minute or the 5-minute to take advantage of that small move on that wick entry to catch the breakout of structure. So you could have caught the lower time frame entries by using the exhaustion on the higher time frames, and you could have caught this impulse move here by understanding that, all right, if this level breaks with volume, it's going to cause a breakout because it's a structure. Next example. So understanding how market structure works, you understand that the market needs to move in higher highs and higher lows in correlation with lower time frame and higher time frame. So the higher time on lower time frame might be trending, but on the higher time frame it needs to make higher lows as well, which is why we had a bearish move down here, right? Back out to the breakout point. So the next example is this area here. Another double bottom pattern. You see this? Okay. The market came back and retested the area that we just broke out from. Go. All right. First move. So the market always moves in waves and phases, right? So it was like this. Let me illustrate. Boom. Okay, if this is going to be a higher low, then it needs to make it has to have a transition, right? Make a high, then make another higher low, and then a higher high, right? So you see that it made a low point, which could possibly be the higher low that you're looking for with the overall higher time frame trend. So let's back up. We're looking for this higher low down here, where this wick rejection and exhaustion is. We see that, okay, we had a first push. Now, if it's going to go bullish, it needs to make a higher low, which it is right here. You see this exhaustion, these wicks where this blue arc is, this half circle is. I'm going to remove these arrows. Now this right here is a lower time frame candlestick pattern. This would be a double bottom on lower time frame. As we can see, now lower time frame is a lot of noise, right? It's going up and down, sideways, creating all sorts of different wicks and candle patterns. That's why you have to refer to the higher time frame a lot with this pair and understand time frame correlation and candlestick patterns, as well as identify trades on key levels. So look, we have a double bottom right here, and then pushed, and what happened? Structure broke. There was a lower time frame structure break, which initiated this breakout, right? Because breakouts happen for bullish breakouts and bearish breakouts on break of structures. The break of structures, that's what triggers breakouts. So we had a push, broke out, created a higher low on the lower time frame, and then ultimately just continued bullish, right? So how could one have taken advantage of this? Well, you could have looked at the higher time frame, understanding that there's a lot of exhaustion here, that there's possibly a higher low forming to continue with the overall bullish direction. You could have saw that the market made a double bottom here, understanding what's going on and where it's currently at, which is at a key level. One could have taken a buy either down here, or once this candle closed strong bullish, could have just bought, not waited for a pullback, because it is a low point and the risk to reward is very good. So continuing on, let me remove these arrows. So you could have got in here, cut the breakout move, and simple as that. Or you could have entered on the break of structure. Now, what you need to understand, if you're taking these breakout moves, sometimes, or a lot of the time, it's going to have a first impulse move, go up, and then come back down to retest. Now, knowing this, you can either hold through it and understand there's a retrace, or you can get out up here on this move and enter again down here on the higher low to catch the momentum up, the next leg up, right? So a lot of times after breakouts, he comes back to retest, which in this case it did. So you could have caught it down here and rode it up. And you could have entered on this point, understanding that, okay, break of structure. Needs to come back and retest to make a higher low around this area as it is. And then you could enter on these wicks on the lower time frame here by looking for engulfing candles. As you can see, buyers are clearly in control in this area here, this higher low. Thanks for sticking around to the end of the video. Hope you guys learned something very valuable and that you guys will be able to use this strategy for your own day trading as well. Don't forget to follow the Build a Trader Instagram, as well as like this video, subscribe, and hit that bell. I'll see you guys in the next one.